Hey, Dan Passarelli here. Well, I've been talking over the past about 2 or 3 weeks about buying protective puts and the importance of that in this sort of unstable market with a lot of mixed news. And that's what I did a couple of weeks ago, not to hedge my entire portfolio, but to hedge a fairly good percentage of it, easily half of it. And today, I'm shooting this video earlier. This is about 10:12 Central Time. And just within about the last 15 minutes or so, I closed out the protective puts that I had in the spiders, and I took my profits on them. And that is a pretty interesting point for a video today, because there are many people who get half the hedging part right. What they do is they recognize that, hey, maybe this is a good time to hedge, and they hedge, and then they just leave those puts on, and the market pulls back, and they're able to take a profit on those puts, but they wait and they wait and they wait, and next thing you know, the market ends up going back up, and the puts expire worthless, and they lost money on that insurance. Now, first of all, it's okay to lose money on that insurance. Arguably, you want to lose money on your protective puts, but when they kick in, there's going to be a point where you're going to want to take your profit, because that's the only way that they're going to work, is if you take the profit on them. Now, that said, what was my rationale for doing this? Well, we talked in yesterday's video about the hammer candle in SPY yesterday, and that actually showed up in a few other stocks, and whether or not we would get the confirmation candle today or not, which we didn't. The market ended up below the 50-day moving average, at least this morning at the time I'm shooting this video. We're going to see how the rest of the day plays out. And then we have an extremely important technical scenario going on. One of two things is going to happen. We're either going to break back above the 50-day moving average and probably have a bit of a run to the upside, or we could break down below the 200-day moving average, and that ends up becoming a big deal. That tends to hold and tends to be a strong pivot level. Going back in the last year, looking at this chart of the spiders, it did permeate a couple of times, and it can exist on the other side, whether that's the high side or the low side of it, for brief periods, but it tends to hold. Here it acted as a very strong resistance level. Here it was a resistance level, even though it permeated a couple times. Recently, just here in the end of January, it broke through. This was an actual breakout through it. So we're sitting in a really, really key technical level right now. So personally, I took profits on my puts. I'm not necessarily betting that we're going to go back higher, but look, the bottom line is this is hedging my long-term investment portfolio, and in the long run, I'm not super concerned about it. I bought the puts as part of a plan, and having a plan is the most important thing, because you're never going to get out of those puts at an ideal time unless you do indeed have a plan. Now, speaking of plans, if you haven't seen our online training about our checklist to help you develop a methodology for your trading and just how important that is, we're going to have one more final encore of that tomorrow morning, and it's really important to attend that and take that step forward so that you can drive your trading forward and be the best trader, and in this case, hedger, you can be. So the page is going to pop up to register for that right now as soon as I'm done talking. This is Dan Passarelli. Have a great weekend and trade smart.